Imagine a startup that goes from zero to a billion-dollar valuation in just 5 years. Its CEO is a high school dropout who dominates his industry through ruthless vertical integration, aggressive mergers and acquisitions. In 1927, this man was earning $100 million a year, roughly $1.5 billion today. This is the story of Al Capone, but not the one you know. This isn't just about Tommy guns. It's about the greatest financial arbitrage opportunity in American history. To understand Capone's wealth, you have to understand the 18th Amendment. In 1920, the United States government did something economically catastrophic. It outlawed a product with inelastic demand. Americans weren't going to stop drinking just because Congress told them to. Overnight, the legal alcohol industry, which provided nearly 10% of federal tax revenue, was handed to the black market. When government creates a supply vacuum, prices skyrocket. A bottle of whiskey that cost $2 before Prohibition could sell for $15. Risk became the primary cost of doing business. And if you were willing to take that risk, profit margins hit 300 to 500%. Gabriel Capone. Born in Brooklyn in 1899 to Italian immigrants, he left a school at 14 after punching a teacher. His early jobs were as a bouncer and bartender, where he got slashed across the face in a fight. That scar earned him the nickname Scarface, which he absolutely hated. But Capone had something most street criminals didn't: charisma, ambition, organizational intelligence. When his mentor, Johnny Torrio, invited him to Chicago in 1919, Capone saw what lawmakers didn't. You can't legislate away demand. You can only change who profits from it. He arrived as a nobody. Within 8 years, he would be the richest gangster in American history. Capone began as Torrio's enforcer, but he was always watching, always learning. When Torrio retired in 1925 after surviving an assassination attempt, he handed the empire to Capone. The kid was 26. What Capone built wasn't just a gang. It was a Fortune 500 company disguised as organized crime. Capone controlled the entire supply chain: breweries, smuggling routes, trucking fleets, speakeasies, even unions. Every step from production to consumption paid him. Alcohol was the cash cow, about $60 million annually. But he diversified into gambling, racing wire services, and protection. A private tax system on local businesses. His brothels alone brought in $10 million a year. Pause for a second. What Capone built wasn't a gang. It was a conglomerate. Every month, Capone paid roughly $500,000 in what we'd now call consulting fees to police, politicians, and judges. In financial terms, this was regulatory cost. But Capone understood something most executives never will. It is cheaper to own the law than obey it. The mayor of Cicero was on his payroll. So were large portions of the Chicago police force. He even kept detailed ledgers listing which officers were paid what amounts. He ran corruption like a pension fund. What separated Capone from every other bootlegger was branding. Most gangsters hid in shadows. Capone did the opposite. Silk suits, ringside boxing seats, $100 tips, newspaper interviews. Because in an illegal market, reputation is advertising. During the Great Depression, Capone opened soup kitchens feeding thousands. Newspapers covered it constantly. To many Chicago residents, he looked like a Robin Hood figure. Beer during Prohibition, bread during the Depression. Some historians believe these charities may also have doubled as money laundering channels, allowing illegal cash to appear legitimate. Public goodwill became armor. Prosecuting the man feeding the city suddenly looked unpopular. In legal markets, competition means price wars. In black markets, it means real war. Chicago was divided between gangs. Capone wanted consolidation, a cartel dividing territory and fixing prices. Think OPEC. With machine guns, some gangs joined, others refused. Most notably, Bugs Moran's Northside Gang. As long as they existed, Capone couldn't achieve monopoly, so he attempted a hostile takeover. February 14, 1929, 7 men lined against a wall. Machine guns. The St. Valentine's Day Massacre. Economically, this should have eliminated his biggest competitor. Instead, it destroyed his brand. Overnight, he stopped being a colorful celebrity and became a public menace. Politicians distanced themselves. Newspapers demanded action. Capone had traded millions in goodwill for a tactical victory that didn't even work. Bugs Moran wasn't there. The empire was peaking. But the foundation had cracked. Law enforcement couldn't convict him for murder. Witnesses vanished. Juries were intimidated. Judges were bribed. So investigators tried something radical. If they couldn't jail him for crime, they would jail him for accounting. Treasury agent Frank Wilson followed the money. Not guns, not informants, paper. He tracked tailors, jewelers, hotels, bookmakers. Then came the breakthrough. A gambling cashier named Leslie Shumway had kept immaculate records. Next to the name Al sat profit entries totaling over $500,000 to $87,000. Exhibit A. Wilson built a forensic accounting case years ahead of its time. They couldn't catch Capone with a weapon, so they caught him with math. The strategy relied on a Supreme Court ruling. Illegal income is still taxable. Capone claimed he had no income, just luck gambling. But prosecutors showed his spending, estates, jewelry, custom furniture, far exceeded anything a lucky gambler could afford. October 17, 1931. Convicted. 11 years. It wasn't a bullet that ended the empire. It was an audit. Capone served 7 years. By release, untreated syphilis had destroyed his mind. He died in 1947 at age 48, but his financial blueprint survived. Shell companies, cash businesses, political bribery, diversified illegal revenue streams, methods investigators still fight today. His case helped shape modern forensic accounting and financial crime investigation worldwide. In 1933, Prohibition ended. Legal alcohol returned. Prices collapsed. The profits that built his empire disappeared overnight. Capone wasn't just a criminal anomaly. He was the predictable outcome of policy. Economists still teach the lesson he proved. When government bans demand, it doesn't erase markets. It replaces businessmen with criminals.